How likely is a recession in 2020? This is the question of the hour. It's on everyone's mind.
Hi, we're John Elizabeth Finley with the Finley Group.
We need to remember that next year is a presidential election year, and probably one of the most controversial elections yet. There's going to be a lot of questioning and political debates about the economy, why it is so good, and questioning if our economy is going to decline. So this can stir up a lot of hype. There have been 4 major surveys this year asking experts if they believe we are going to see a recession. 67% do believe that we should see a recession by 2020.
Pulseonomics surveyed analysts and 59% believe that we will see a recession by 2020. Why do we think this is? We've been in the longest recovery in American history, so we should expect to see a slowdown. The GDP, gross domestic product, will slow down, but let's look up Webster's Dictionary's definition of a recession: a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters.
We need to remember that recession does not mean housing crisis. In 3 of the last 5 recessions, housing prices actually increased during the recession. Obviously, 2008 was the most drastic. Now, on the same survey from Pulseonomics that asked if they anticipated a recession, they also asked in the same day, at the same time, the exact survey, the same analysts, they were asked what would trigger the recession. Number 1 was trade policy, number 2 was stock market conditions, and number 3 was a geological crisis. Number 9 on their list of triggers was housing slowdown. If you remember, in 2008, the slowdown was caused by the situation with the mortgage industry.
Also, in the same survey on the same day, they asked these same analysts about the median appreciation of housing. All of the analysts said the housing prices are going to go up, not down. Appreciation is going to slow down, but the prices are still going to go up everywhere from about 2.5% to 4.1% through 2023. Why is this important to know? We don't want to get in a panic about buying and selling and become afraid that it will be like 2008. In fact, Morgan Housel, a well-renowned financial analyst, said an interesting thing is that the widespread assumption that the next recession will be as bad as 2008, natural to think that way, but statistically highly unlikely. Could be over before you even realized it began.
Prices and appreciation are expected to be more normalized. Don't let all the hype about a recession scare you from the dream and benefits of home ownership. In my opinion, it's one of the very best investments that you can make. According to Mark Fleming, First American's chief economist, he says if the 30-year fixed rate mortgage declines just a fraction more, consumer housing buying power would reach its highest levels in almost 20 years. So what does that tell us? It tells us to not be so caught up with all the hype. Buyers, just make the move. And as always, if you have any questions at all, please feel free to reach out to us. Again, we are John Elizabeth Finley with the Finley Group.
Make it a great day.